Right now we are talking about life insurance. No matter your age, you should make sure you do have enough, but how much is that? It can be very confusing, and Stewart Welch is our financial expert, and he joins us on this Money Tuesday. Good morning.
Good morning.
It is a very confusing thing.
It is confusing.
Life insurance, oftentimes you can get through your employer. You'll have certain amounts that you have, but you say oftentimes we don't have enough or the wrong kind.
Well, I think the big mistake is most people either don't have the right amount or they don't have the right type. And so what I thought we'd do is just take a minute. We won't get through all of this, so we'll put it up on your website.
But you've taken some scenarios.
Okay. So let's run through them really quick. If you're single, no dependents, there's really no need for life insurance. So a lot of people have it and they go, well, why do you have it? And they go, I don't know, it's just somebody sold it to me. So life insurance is one of those products that's typically sold. You don't go out and try to seek it out and try to buy it.
Because you're saying there's not necessarily anyone that is going to be a beneficiary.
If you die, there's no one that's dependent upon that income. So it's really about replacing income.
But you could have a relative or a family member as a beneficiary.
If you have a dependent, then you would need it. But in most of the cases, you think of the young people that are getting out of college and they're single, they don't need life insurance.
Okay, all right, next one.
So we're married, but no children.
Okay.
So now there's probably no need for life insurance except maybe to cover joint debt. So maybe you have a mortgage on a home and you say, well, if my husband died, I'd want to have, go ahead and pay that debt off. And Janice, one thing, it's really inexpensive if you're using term insurance. So say a 15-year term insurance for a male age 40 is only $300 a year.
Which you spread that out, that's not much at all.
It's not much at all. So you can afford to maybe have a little more insurance once you get in there to buy it, maybe anticipating you're going to have some family down the road.
Okay.
Now here's the big one. You're married with children, so married young children. Now you need lots of life insurance. And let's say that you determined if the husband died, you need to replace $75,000 a year of income. The amount of insurance you're going to need somewhere between 10 times and about 25 times, so 750,000 to a couple of million. But even a couple of million, say 25-year term, which lasts a really long time, is less than $2,000 a year. So it's not overwhelmingly expensive if you stay with term insurance and don't get into the cash values.
Okay.
So married with grown children. So here's what we run into a lot. They bought insurance when they had young children. Now all of a sudden, their children are grown and off on their own.
Okay.
And they're like, what do I do with my insurance? And in most cases, we would say, well, let's look at the reason that you bought it. If that reason is no longer there, it's probably you need to go ahead and drop it. So we'll pay attention to that and take a look at that. And
go ahead.
Okay, and then we get to if you're retired. So again, we see a lot of retired people. That's a game changer because now you're going from accumulation mode to decumulation mode. You're actually starting to take your money and spend it. Cash flow is king. We see lots of people there with it that have insurance, and in those cases, most of the time we would say that's probably a good time to drop it.
Okay. I know it's a lot to take in.
It is a
I
lot.
think you did a
it's
really
on your website.
It's on the website. We'll have it there so you can read through all of that if you had any more questions about it. But it's something we all have to deal with. Thank you.
Thank you, Janice.